Hey everybody, welcome. I want to start out really quickly and give this warning. This is 2007 on the left right here. We made a higher high. This is the current chart pattern on the weekly charts on the S&P 500, just shy of a higher high. These two chart patterns look eerily similar. In 2007, this led to a 57% correction in the S&P 500 after we made that higher high. If we do the same here, a 57% correction could put us down in the 3000s, if not the 2000s. On S&P, I just wanted to throw that out there as a warning that it's an eerily similar chart pattern that I'm seeing right now. And I can jump into requests. I'm a trend pullback continuation trader, so I look for that kind of pattern in the markets, and I will take requests until until we're good. So I brought some that we can look at. Apple, of course, is in some sort of correction off of the high. And we have a big first move down right here. We have a correction that we've done, a 50% retrace right in here. And if we get a repeat of this, which the market tends to do these echo type patterns quite a bit, where we get a second move down, we can see Apple down in the 140s. So grabbing requests out of the chat, I see Yelp. And jumping onto the daily chart here, looking at it, this hasn't been a big performer right here. Been a lot of sideways for a number of years. When we go looking back, that doesn't present a lot of, as I said, I'm a trend pullback continuation trader, so it doesn't present a lot of trend to take advantage of right there. It's a lot of consolidation. And looking across here, a little bit of a lower high situation. So a very major resistance for this chart coming up at 47, but we do have a series of higher lows as we look across here. So we're kind of in a squeeze situation where this tightening of price action will probably eventually break out and make some sort of big move. The big question, though, with a high degree of uncertainty, do we break out to the upside or do we break down and go to the downside? That's a big uncertainty, and I'm not sure. So this could continue filling this out for another 2 years before this really runs out of room and of that squeeze. I don't know. And it doesn't have to go anywhere at all. It can maintain sideways indefinitely. So next up in the chat, I see Lily. This was on a monster run. Absolute monster run, and has recently started pulling back. I see support all the way down here at 646, but it can be potentially complete because it did this big first move down off of this high. And then, like I showed a second ago on Apple, we did this second move down, not time-wise, but we did price move-wise. We actually completed that right there. This can lead to first move up, second move up, and an expansion to the upside right there. So let's dive in just a little deeper into this pattern, see what we've got cooking. This went pretty deep here on this retrace, 76 retrace, but that still allows upside price action. My target for this right now, I've got an alert right at 1,000. If we can get continuation, 1,000 would be the target for the upside right there. Looking at resistance at this prior high where we stopped, 820, and then we're going to have to get through this 900, and stacked on top of it is the 930, the all-time high right up here, and then that could lead to that 1,000, 1,015 expansion right there for Lily. AAY, next one I see in the chat. A little bit of a downtrend we've got cooking here locally. Having a lot of resistance on that trend line. Even recently, not able to break above here, not able to break above here, still riding that downtrend. If we can break up through, back test it very firmly, that would lead on to higher prices in my book. At the moment, running from the current high to the current low, that would set a potential 55.50 upside target, but we've got to get through the resistance. And that resistance is pressing down with every day we move forward. So that is the crux of the matter on that one. And if we were to get, we did touch that 50% like we did on Apple. If we were to see some downside pressure, that downside could lead us to a move down into the single digits down here in the $4 area. It'd be pretty rough on AAY. So there's kind of your upside and your downside right there. Upside targets right around 55, pretty wide. $50, $51 potential range there. On TSLL is hard to chart by itself. It doesn't really tell us much. Tesla, on the other hand, is the underlying for that. And we've got lots of stuff cooking. When we look at the bigger picture here, we have a move down from this high we made back in December to this low we made just in April. We have a 618 retrace right here, holding pretty firmly and rejecting. So we have that first move down, that retrace, that second move down potential on the big picture time frame here, 6-month pattern. Put that back and grab that arrow. Grab the arrow, not the. There we go. So looking for potential support down around 160 if we get a continuation of this move right here. Now, that's the warning to the downside. This price action off this low, somewhat bullish, and we have the same sort of pattern kind of intact here, and we could see a repeat off of that, off of here, and we could see some upside action. And this actually has a little bit more structure to it that could lead to a bigger move that takes us on up to 630 right up in here. And that's the prior targets for the extension. So somewhere in the 540 to 660 area would be my expectation, maybe out into later 2025. If we're going to get that, we'll probably move up in here, get another retrace before we get continuation up like that, if we're going to do that. Now, the risk here, if we start breaking down below this 250 area right in here, probably going to get that extension on down to 160. So that's what we got cooking right now. On the even smaller time frame here, moving down, we do have a move off of that 618 right there. Move down right there. This right there, projected off of that. We could see it right into that 250 area. So we may go visit that 250 area, test support. If we can bounce off of it, that upside target. If we break through it, I'd definitely be a little cautious. We might see it, definitely step across, kind of fool some traders at 250. So that 250 is not a definitive line in the sand. It's kind of a gray fuzzy zone, probably $10, maybe down to 240. Could see that a big spike down in reverse to indicate upside. But if we get daily closes down here, probably going to push it on down to 160. So Tesla's very complicated. Now, how would that affect TSLL? Take it from the current up to the high. That's 93% upside. So TSLL potentially looking at like 180% with a 2x leverage. And to the downside, if this thing's going to crack, got a downside potential, 50% downside. That's like 100% downside on TSLL with 2x leverage. So that's the way that works. All right, VRT. A little bit more clear of a chart here. We've got move down. We've got that retrace. This is going pretty deep. Based on the statistics of a automated system I have, 182 upside target with about a 75% likelihood right there due to this price action. Probably get continuation. Now that trade may last 6 months out here. It could be the end of, well into the end of 2026 or the beginning of 2027 or beginning of 2026. Excuse me, end of 2025, beginning of 2026 before we get there. This could lead to some chop around before we got up there, right there. But that 182 would be the upside target. Now, if it does fail, probably going all the way back down to the lows down here around 54. So that's a very wide range again on that stock. But right now, 75% likely to get the continuation on the upside. And VST, Vistra, this one has pretty good setup for going higher. 223 would be my upside target right there. Support here at about 140, and then support on down at 90 at the lows, down there around 90. So if we break down below 140, we're probably coming on down near the 90 area, if not going lower low. And net, previous speaker just gave her viewpoint on net. Yeah, so net probably has an upside target, 195.81. Pretty simple right there. Got the high, got the low. It's a trend. This is the pullback. Here's the continuation. 75% likely to hit that 195 target right there. That doesn't mean it won't pull back. Support right down here around a 130. We could see that come all the way down in there before we reach up there, but probably likely to hit that 195.81 area. Now extensions, let me remove the drawing tool. Extensions 213 on the upside. That one's only 70% likely, and then 35% likely 270 up here based on this pattern. And GE Vernova, that one's at targets, highly likely to see a retrace. We may be able to extend it on up to 511. 617 would be the next one after that. Very commonly we do see this grind right in here, pull back and get an extension like this. Reaching that's only 35% likely though, before we take a bigger retrace back down, visit the daily roadmap line, what I call the roadmap line right here, around 400 or so. And then if we were to break supports, we might go make a lower low right there. That's GE Vernova for you. Netflix. Yes, that one's played out. As you can see, that one kind of did that little chop I was talking about right there. It's a very common pattern. And we've hit that upside target. This one highly likely to experience some retrace in the coming months ahead. Highly likely. Now, if we were going to extend it, 1400, 1600 would be the next upside fib levels right here that I would be looking for. I've been tracking this move, and we several of my traders traded for that 1100 area. And we hit 1200, which is a rare event. 35% of the time we do that, and then a pullback would be more likely in my book. I would wait for the pullback before I got long again. But if you're already long, be careful. If we break back through the 1150 area, maybe taking a trip down into the low 1000s, if not the high 900s once again. Alrighty. Uber also has hit the extension right there. And it very, like I talked about, that kind of hits that 1272 area. We did get a little extra juice on that one. Came all the way back to the breakout right here. Kind of bounced. This may possibly be setting up for an extension up to that 1618 level, which is right around 98 right here. So you got 98 is your upside target. And right here, this breakout, 82, that's your support. If we start breaking that 82, probably going to come on down maybe in the 78 area. And if we get below that, could take us back down in the 60s down here. So you got to be careful. There's one of my automated systems going off right there. And next up, Meta. Excuse me. Some allergies got me this weekend. And right now we have this, like Apple, first move down. We've experienced a deep retrace. While this does set the it did tip the odds. We're going on up to 789. I'm very cautious that we're going to get a second big down. I see this pattern across all the Mag 7s except for Microsoft. So it's present on Apple, Google, Apple, Amazon, Google, Meta, NVIDIA, and Tesla. The same first move down, retrace, potential for a second move down. All present on all of those except Microsoft right here, which is set for an expansion to the upside. We already did this first move down right here, copied, pasted right over here, did that second move down, got a little extra juice on it. This set the upside target to right up here, 480, 49, basically 48, 489. Didn't quite click on the high there. 49. It's probably where Microsoft's going right there. And Carvana already hit that target. Be careful. And that was from a further one back. So pulling up to the most recent, still already hit the target. Retrace to the breakout. Same rules apply. As always, 289, it's kind of our support. If we get below that, probably going to come visit this daily roadmap line right here around 240. If we get below that, we may go visit the prior low down here around 150. And if we can hold, break back up through that prior high at 346, we'll see the extension up to the 1618 extension. That would be roughly 436 right there on the upside target for Carvana. Alrighty. Oracle. This is like the AI catch-up trade right here. Turn off my drawing tool. Remove what I've got. Here's the high. Here's the low. We're already at that 75% likely 212 target. 226 will be the extension target. Right up here. We may see price come on up there. Reject back down. Retest the breakout level from the high back here. Then it's decision time. Do we retrace more deeply, or are we bouncing going up to the 1618? Up there around 270? Yeah, 269. This has been one that's been on my radar right here. Upside's right up there. Potential downside. We've got that level right in there, and then back to the lows back here. Like that. This pattern just happens over and over in the markets. And RGTI. We've got the high, got the low. This one's just been grinding at this 618 level right here. It popped up. We left a gap down, which I have a theory on gaps, gap downs. Doesn't really work on gap ups. But you have people buying right into this high right here. If people buying right into the high, and then it gaps down on them, and they're like, oh, sugar honey iced tea. And it gets down somewhere in here, and they buy, they like double down or possibly triple down, right? Then price climbs back up. They're back to, a break even, possibly made a little money. And then I just want a GTFO, get the fudge out of this thing, and then we get another sell off. And then price chops around. Maybe some people that were still buying here double down again, and they get back to break even, and we struggle to fill the original gap because of this kind of market psychology, right? People doubling down, just want to get out, made my money back. So it creates this resistance gap, and that's what we're seeing right here on RGTI is resistance, resistance, and we keep rejecting off of that area. Now, eventually, we should be able to get enough energy to pop through, fill that gap, and go on up to 25, possibly 29 on the extensions there. And then we'll probably do another retrace at that point. That'll be a resistance, more than likely. If things got really sparky, 46 would be the upside resistance right there. Then we'll probably do another retrace. It's just kind of the way this whole thing works. All right, GE. Right there, looking for that to come back down after that massive retrace, that massive expansion right to that 1618. I mean, it's magic how this stuff works right there. Look at that target. We did a little hiccup right there at the 1272 and right on to the 1618. I would expect this to retrace probably down in the low 200s at this point. And yeah, DDOG. Yeah, it looks like that one's popping. We do have that on the daily chart. We do have bigger resistance coming up just a little bit more, somewhere around 128. Right there. Get through that, we could see a pretty massive upside potential here. Now, it also could have the Mag 7 first move down up into that resistance. Control copy paste, and we could see a further big decline down in the 65 area down here on Datadog. Got to be careful on that one. I am long this right now. I may have gotten out well based on that chart. I was looking for about a 30% upside on some options. Looks like that may be almost to my target. You can see sell my calls right there. All right. Inmax. Whew. So IPOs start off in a bearish corrective pattern. Even though this spiked on IPO, 95% of things that IPO will end up at a lower low sometime in the future. And this satisfies that criteria. Now, is it a bottom? I don't know. I don't really have enough candles to do much with. I don't trade IPOs. They're not my bag, baby, because typically they end up lower low. Is this the low, or can we extend it on down in the single digits? Not sure yet. Stay tuned. We'll have to watch that chart some more. All right. Did Lily already? Riot. We can look at this one. We have to go big picture. We got a few minutes left. Excuse me. I do this stuff every single day on YouTube. And if you want to come see me, David's going to post a link in the chat for you. JeffryTurmire.com/YouTube. I do this stuff every single day, just like this, same patterns, same everything. So Riot has this big weekly pattern right here. Potential, absolute insane numbers. If we were to break out, I'm not sure we can do it. Do have a ton of resistance we've been hitting our head on right here. Look at that high, this low. So we've been stuck in between these two fib lines here. This one here and this one here. Which one's more powerful? We hit this one more recently, which could lead to an erosion of price. So support right now down here around $3. Resistance, very solid resistance right here around $25. May only be able to muster something into the hundreds if we can break out. This seems like a very lofty goal up here for this stock. And based on the mining environment for Bitcoin and the difficulty, this may be the reality right there around 27 cents a share for Riot. All right. APLD. Jump back down to the daily charts. And we're probably played out for now, looking for a retrace. My patterns don't work so well on things that are $10. There's a different price dynamic tends to play out at low price stuff, which is under $10 or around $10. So I do caution here. Doesn't mean it won't work, but this pattern, some different price action things play out in lower price stuff. And that just applies to equities, not to like futures, Forex, things like that. So we have that high, we have this low. We did tap that 127 or 1.1448, which is 75% likely. We did not tap the 1272. We could be retesting the breakout there. So if we're going to get expansion, that 1741 would be as high as I was looking, and retrace may be realistic here, 750 on the downside for APLD. And MU, we got a couple more minutes. Still looking for this bigger breakout here. My target, I am long MU via MUU. Have this big pullback. We have this big move up. This is very similar, but upside down to Mag 7s. We had this big move up here. We had this retrace quite deep. See, Control V, copy, paste. Looking for that bigger upside. You can see I drew it over here, but this is the level right there. Looking for that 200 right there. We are breaking up through the consolidation that we've had going for, gosh, almost a year. So we're getting a breakout right there, fresh. That can lead to a rapid price appreciation. So conservatively, 179, aggressively, 200, and super aggressively, 260 to 300 up here. I'd be careful betting that big. All right. And T-Mobile. And we're on a correction, probably looking for support down here right now. If we get below that, we could see a bigger swing down around the 150s. So looking for something in the low 200s and then possibly 150s. Not feeling highly confident about this. This looks like one move down. We may get a retrace to a 618 and then a second move down like that. And PFE. So Pfizer came up in that same kind of pattern I've been talking about. First move, copy, paste, second move right there. Hit that resistance right at my magic roadmap line. Turning down, that can lead to continuation lower, at least a revisit back to the lows. That low, this high, expansion or extension of the downside, potentially down to 20. But we do have support right here at that prior low, funny enough, at the 618, 22 area right there. So if we pull back, find support right here, come back up, retest resistance at that 25 area. If we can get through that, we may see higher prices, probably have some resistance right here at that prior consolidation around 26, 27 on PFE. And KHC. Excuse me. What's the likelihood of a 2008 repeat? I put it pretty high. I just don't know if it happens this year or next year or, when it's going to happen. I think we're going to have a big market correction in the next probably 5 years. It's probably just about inevitable. So this right here, first move up, big, deep, long retrace. We've got support down at 23.80 area. It's kind of the line in the sand. If we step across that, we may be going lower low than we went back during COVID time. So we could be looking at 17 if we do break below that 24 area right there. Resistance right now at the roadmap line, the daily coming down every day, somewhere around 28. And if we can get above that, it'd be the first move up, retrace, and the second move up would put us quite high. Pull this up, do one little extension for you, and then I'll probably wrap this up. And we could be looking at an upside target somewhere around 55 if we get that expansion right there. David, I don't want to run over here, so just let me know. And EWS, Singapore. It's been kind of choppy sideways. We started out with one like this. Hasn't really gone anywhere for, gosh, 30, 40, 30 years almost. Hadn't really, we went on a deep correction, but we've basically been flat for 30 years. That's not like a trending stock that I would put my money on right there. Now we could break out, very possible. We get a move up through 30, could be looking spicy, but it's not the kind of thing I typically would put my money on right here.